Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, it's NFP day. Hope everybody's doing well. And I hope you are ready for some market movement, potentially. With NFP right around the corner, markets are on edge. There is likely to be lots of movement here today. It's, of course, largely dependent on how the numbers fall. And I had a couple of people comment overnight on my video yesterday in preparation for NFP saying, but which way is it going to go? Is it going to go up or is it going to go down? Is gold going to go up? The stock's going to go down, dollar going to rally. And I just want to kind of get out in front of it and say this publicly. Look, here's the thing. Nobody knows what NFP numbers are going to be. I made a tweet about this actually this morning. If you're not in our Telegram channel, by the way, please take a second to make sure that you are subscribed. If you're a real fan of the show, make sure you're also in the Telegram channel. I drop a bunch of bonus stuff, and the editing team does a great job of posting bonus charts and clips into our Telegram channel. So if you're not in there, definitely take a second really quick to make sure that you're in the free Telegram. So I made this post because I think it's really important that we start our discussion today. For those who are arrived here on time, including myself. Hey, I was late yesterday. I'm on time today. Can't miss NFP day. So I made this post and I just want to go through it real quick. Basically, long story short, what I said in this is if you think you're going to come into an NFP day and you're going to be the one person say, oh, I'm going to sell gold, it's absolutely going down, or you're going to buy the NASDAQ because you know it's going up, right? You don't know anything in markets ever. Nobody knows something in markets. Anybody who thinks they know what's going to happen in markets is a fool. Nobody knows what's going to happen in the markets unless you're insider trading or you have some information and you're trading, based off of something illegal. You don't know what's going to happen with the market. You have an educated guess. Now that's a big difference. When you take an educated guess mindset, you don't YOLO your account. There's no point you never know for sure. So why would you ever YOLO your account? Makes no logical sense from a longevity approach to trading. Now, if you're here to have fun, if you treat the markets like a casino and you acknowledge that, do your thing, have fun. But for those of us who are serious about this stuff, long-term see this being a massive, kind of thing in our life, a core income source, a passion. There's never a reason to go YOLOing all in on a NFP report. Why? Well, the smartest minds in the trading space, the best of the best, can't predict NFP. The smartest hedge funds who have quants, economists, and mathematicians of all sorts, massive brain power in one entity, a hedge fund, BlackRock and JP Morgan, they have the best abilities possible to predict something like NFP, and they still can't do it exactly right. Are they better at predicting it than me? Absolutely they are. Absolutely they are, because they have way more data sets, way more access to things that could help them better to predict it. But even though they have that, they still get it wrong sometimes. Well, they get it wrong often, right? It's just very hard to predict this stuff. So my point with showing you that is that the best in the business can't predict NFP. Oh, look at this. We just had a meme drop. Someone threw this in there just now. The best in the, don't be like Squidward, okay? Let's watch this really quick. Okay, see, there you go. That I didn't put that in there. That was That was our team. But Julie, I think, dropped that. That was a great meme for what we're about to go into. So what you have to recognize, again, is the best of the best can't predict the NFP report. So us regular people, we're not going to be able to predict NFP ahead of time. Now, you might say, I think gold's going to go up. And what if it does go up? And you were right. Don't let that fool you into thinking that you know what the market's going to do before news. A lot of people make that mistake and then they blow the account on the next time around because they think they know something and they don't. So why am I being so depressing? I'm not trying to bum anybody out. I'm trying to give you fair warning. If you think you know what NFP is going to do exactly right every time, you don't, and you're going to lose a lot of money. We don't have to know what the NFP data is going to be in order to trade it and make some money, right? At the end of the day, I don't get it right every time. I don't need to. I can make educated guesses, manage my risk, and in the long term, my goal is to make more than I lose. Could I lose money today? Absolutely, I could. Could I lose money for the next 3 weeks? Yep. And then in the long term, I'll still make money because I'm sticking to a system that I have confidence in, that I've back tested, that I've worked really, really hard, dedicated my career to this. And I know in the long term, I'll make money. But in the short term, I could go up, I could go down. It's just trading 101 another day at the office. Literally, I am at an office right now. So we'll see. But NFP comes out in just about 9 minutes here, guys. What I want you to understand is when we take a look at some charts, we have some real critical stuff on the line. S&P 500 is threatening to break its 200-day moving average, which is a key and critical level. The NASDAQ has already broken it. NASDAQ is trading below its 200-day moving average. The Dow Jones has not yet quite gotten there. The Russell, said goodbye to the 200-day moving average a couple weeks ago, right? And continues to have struggles. The dollar index, not that we really look at the 200-day moving average for the dollar index, but momentum here clearly favors the bears. Can the data reverse it today? What are you looking for? If you're looking for a strong bounce in the dollar, you're looking for hotter than expected jobs print. You want a strong jobs report for dollar to rise. And also, by the way, stocks would probably rise as well. If you get a really strong jobs report today, that would reinstate some confidence in what has been some shaky economic data. We can take a look at the U.S. economic heat map to get an idea of what I'm talking about. And you can see our surprise index littered with some red columns or some red rows, if you will. Red rows show you that the U.S. economy is not in a bad spot, but it's missing the expectations that we had for it, right? CPI is still sticky, still hot. So we have this rising inflation. Prices are going up, but at the same time, you have some stuff here that's not so positive, right? ADP this week was a big mess, and then Jolts the last time around was a mess. So we're gonna have to keep an eye on that. Also, I just noticed a programming issue on this. I need to change the colors. Jobless claims coming in lower than expected was actually a good thing. So let me just write that down so I do not miss it. Jobless claims, eco heat map. Okay. We're going to fix that after the stream. But yeah, so overall, again, some mixed data here. And so the point is the dollar index has lost its kind of stature as this impenetrable economy. We're seeing some soft data here recently, and that softness has caused the big slide in the US dollar. The US dollar is sitting at a key support level. If you're watching gold, if you're watching currency pairs that have the dollar in it, today's pretty critical because, again, what if we get a hot jobs print? And I'm gonna just be nice about this, but there's nothing 100%. EU bullish 100%. Could it be today? Maybe. We don't know, right? But you're talking 50%. 50% chance it goes up, 50% chance goes down if you're trying to take a last second guess on which way it goes, because we don't know the jobs data. What if jobs data today comes in red hot? The euro dollar, not likely to go up, right? The euro dollar would drop on strong US dollar jobs data if it was truly strong enough. You get a really strong jobs number, the dollar would bounce hard. Because again, it's been in this sell-off mode. So if you get something that really reinstates some confidence in the US economy, aka a roaring jobs report, that would cause the dollar to jump, probably cause gold to drop, probably cause stocks to rally, right? It would reinstate some of the confidence that we've lost. This market is fearful right now. You want to know it's fearful? Here, you want to for sure see the data. Show me some data, Nick. How do you know the market's scared? Well, look at the AAII Investor Sentiment Survey. Nearly 60% of respondents say they feel bearish about the U.S. stock market. That tells you, whether you trade stocks or not, that people are scared right now of the state of the U.S. economy. They're worried about tariffs. They're worried about all these things. Does that mean that it's going off a cliff? Not necessarily. It means that sentiment is very bearish. So if you get a hot jobs print, meaning a very strong jobs number, the potential energy for a rally is very, very real. So again, we don't know what the jobs data is going to be. I am not going to sit here. It would be foolish and gambling like if I were to sit here and say, I'm going to buy gold heavy right before NFP, or I'm going to short gold heavy right before NFP. We don't know the jobs data. It's foolish to make a giant trade right before NFP. So many people do it. They blow accounts and then we no longer hear from them. Why? Because they quit trading. Because trading it's not as easy. It's not like showing up to it's not like pulling the lever on a slot machine. You have to put some thought into this, and trying to make a gambling guess of which way NFP is going to go is a really dangerous approach, right? So Nick said gold is going to 3K. It absolutely is going to 3K. It may be this week. It may be 10 years from now. We don't know. Eventually, I think it will. But we'll see. Again, if you get a strong jobs print, gold probably retraces further. Gold is operating. It's got this kind of anti-gravity effect right now because the U.S. economy is concerned. Or people are concerned about the U.S. economy. So if you get really strong jobs print, it wouldn't be great for my trade because basically what would happen is it would cause gold likely to weaken on a really strong U.S. dollar. That being said, a strong jobs print would be really good for some of my stock positions. So I'm a little bit hedged to some degree. If you get a really strong jobs print, it's probably going to send gold lower and probably send stocks higher. That would be my best guess. If you get a very weak jobs print, gold could take out those highs today. But again, we don't know. So here's what I'd be looking for. Here's a more granular answer. I'm already in a gold long. But if I was to add to a trade, it would look like this. If you get a really soft jobs print and people are, they sell dollar hard, right? If gold takes out those highs, pulls back into this area, to me, that would be an add to the trade type of environment. I don't have much extra cash sitting in the account. I'm pretty positioned right now. But if I had extra cash, I would look at something like that. I trade on a stock brokerage. So I have cash in a portfolio as opposed to like lot sizes on a CFD brokerage or something like that. I would be potentially interested in adding more GLD shares, which is what I'm trading. So, we'll see. But that would be that scenario. For gold, I am still bullish, right? But if we have a really strong jobs print and it causes us to take out these lows, that's my signal to take a loss on the trade and move on to the next one. So again, I don't know what's going to happen with NFP. I've been in this trade for a couple of days. I would obviously like to see gold break through those highs. But if it doesn't, if we get jobs data, the other thing is we don't know exactly how gold is going to react to strong jobs data. I would guess that gold would move down initially, but the market is so resilient here. I'd be wondering, even if you get a move down here, if buyers would step in and hold that area. That's why I'm not, that's why I'm willing to hold the trade to see if it actually, if it does test that level of support, can it hold there? Or does it, kind of break structure and continue lower? We'll see. We'll see. You getting stopped out, Nick? Sorry. 100% I will get stopped out because the way I exit trades is I trail stops. So either market will tank and I stop out there, or what happens is it breaks through those highs and does what I just talked about. If that happens, stop loss would get moved here and I would continue to do that until the stop loss does get hit. So 100% of my trades end in a stop loss. Guys, we got just about 20 seconds to go here. News will be coming out. I'll be reacting. Don't go anywhere after the spike. It gets interesting after the spike. Coming into our breaking news. All right, let's see what we get here. Stocks initially higher here. Gold mixed. Russell higher, Nas higher, dollar index actually lower here. Let's see what we've got coming in here. Ooh, look at this. Softness a little bit, not a huge miss, but slightly soft on the US NFP number. Unemployment rate ticked up. Interesting stuff here. So you've got an initial reaction where unemployment rate went up. This would be bearish US dollar, right? This is also bearish US dollar. Average hourly earnings came in line with expectations. Let's jump back to the charts, see the reaction. So an initial spike higher for stocks, right? Dollar index down, that makes sense. This arguably good for gold, I would say. Bitcoin also up on this, interestingly. Stocks kind of mixed, right? I would argue that this is not great for stocks at this time. Unemployment rate going up, labor market data weakening. I don't love that scenario for stocks today. Although, to be fair, stocks are sitting at a key level support. That 200-day moving average is getting tested. We'll see how market reacts. But again, this actually does not look like a great print for me in terms of stocks. It actually looks quite good for gold. Softness in the labor market here. Softness in the US dollar. Dollar index, however, kind of snapping back here. Stocks actually now slightly in the green. Gold just kind of staying steady on the day, unmoved on the day. Employment change for Canada looks interesting too. Let's switch back to our full view so we can just take a look at this. So again, overall, gold pretty much unchanged. Wow, that's actually a really kind of wonky looking candle. Didn't move really strongly in either direction. Moved down ahead of the news, spiked on the news, and then just kind of gave it back. So sitting flat on that movement. S&P 500, again, saw an initial spike higher here. Perhaps some excitement about rate cuts. Let's take a look here also at yields. Yields are an interesting part of this story. Yields actually spiking higher, but not really. I mean, these are not big moves, to be honest. We're actually seeing a pretty muted response to NFP. Non-farm payroll employment change came in soft, but also they revised the previous number down. So definitely a soft report, but perhaps the market was kind of expecting a soft report. I mean, this is interestingly not getting more of a reaction here out of stocks at this time. Again, you have stocks. They're sitting at a really key long-term level of support on the S&P 500 around that 5720 level that we tested intraday yesterday. NASDAQ also, but again, I'll give you my take on this. This looks positive for gold. It looks negative for stocks, and it looks positive for bonds. That's my opinion. You know, I've got my TLT position still on. We'll see if it can continue to bounce here. Gold here, like I said, I would say that this was a pretty good print for gold, but I will say this too. There's some noise in this market right now that has been very loud, and that is the news cycle surrounding the tariff stuff, right? So even though I would say that this data point is very positive for gold and kind of concerning for US stocks and US economic data, right? US dollar down, this makes sense to me, right? Dollar holding its losses here, right? Makes good sense. Stock market slightly red. I would actually argue that I would think that would move lower. We'll see if I'm right about that. But again, stocks have also already kind of been in a massive down move. So, you know, maybe it's just kind of running out of gas here for the bears in the short run. That being said, gold to me makes sense to potentially continue higher. I like the upside for gold. Again, if I'm wrong, if you get some big reversal, if you get a peace talk on Ukraine and Russia and the US that progresses and, you know, we get a headline today, gold would drop like a rock, right? So you have to be aware the difficulty of this market right now is that headlines, especially with Trump, love him or hate him, he's a volatile guy and he's makes very, very sharp points about whatever he is interested in accomplishing. And so those sharp points turn into strong headlines that can cause really big swings. So, you know, right now, I would say that the data that comes out this morning, this looks positive for gold on the losses, I suppose, of the US dollar. That would be my take on this. US dollar continuing to take out those lows. So far, seems to be playing out as we would have expected. Stocks, like I said, I would be surprised. I'd be surprised if we had a massive update today. I guess not as surprised as I would have been a couple days back, because now we've kind of come into a long-term level of support. There may be, and this is why I'm not interested in shorting stocks, okay? You are sitting at arguably one of the most powerful technical levels. So technicals versus fundamentals are fighting a big battle here for stocks. You have a huge level of support on the daily, and you have the 200-day moving average, which is a critical long-term kind of indicator of trend for the S&P 500. The reason I say there's a big battle here between technicals and fundamentals is technicals are sitting at, if there's going to be a buy the dip kind of concept, I would say it's probably going to occur around this area. But fundamentally, soft jobs data this week has already been, we saw with ADP numbers and JOLTS numbers, those things made the market sell off when they were red, right? So there was concern about it. So I think you're in a kind of an oversold key level of structure in combination with fundamentals that are not super great right now. You're missing expectations. So, for me, stocks, I'm not interested in shorting them, but I'm also very cautious to take huge long positions at these levels. I have been buying some individual stocks. I've been talking about that in my video. I won't go too far into individual stocks here today, just because generally my audience is more futures, gold, and a little bit of Forex. But so we're at a key level of support here. So I've been buying some individual stocks that I like as the dip has been going on, but in terms of like getting a big old fat position long on the NASDAQ and S&P 500, I'm a little bit cautious at this time. There we go. Gold up 0.5%, looking good here. Again, gold continues to be a bullish setup on the Edge Finder, gold and silver for that matter, but gold is number one on the Edge Finder, and I've been playing this one pretty strongly recently. Gold is holding really well. Very bullish reading continues to be the case on the Edge Finder. So I'm going to stay with the trade. Edge Finder, for those of you who don't know, what we're looking at is an economic data, technical, and sentiment screener, which allows you to basically look at a big collection of data, right? So we just had employment change data come in soft, inflation data, retail sales, PMIs, GDP numbers, the overall trend, seasonality, retail positioning, institutional positioning. The Edge Finder, what it does is it takes a full inclusive look at lots of different data points and generates a bias, also kind of generating a watch list here for us. When this popped up on the watch list, I found a technical pullback entry, and I've been in this trade for some time. So, that's the idea, is I look for confluence across economic data, technical, and sentiment. Most traders don't have an issue with the technical side. Most traders can figure out support and resistance, moving averages, liquidity grabs. Like that stuff is all easy. What's not so easy is understanding, what does this economic data report really do? Does it create a sustainable uptrend for gold? Does retail sales, do PMIs, do the commitment of traders data support the types of trends that we're seeing? If the answer is yes, adding that confluence can make a huge difference in the trading that we're doing, right? If you have confluence across not just the technicals, but market sentiment, what is institutional money doing and what is the retail crowd doing? If you can track that appropriately, if you can look at economic data and look at the employment change data like the NFP report that we just got and fully understand what you're looking at, there's huge opportunity to understand the market better and make better informed trading decisions. That is, again, the specialty of having a software like this, which allows you to track it quickly and appropriately. So, of course, economic heat map will update shortly with the latest data. It is on a 15-minute timer, so should be in there shortly. Gold, like I said, continues to be a positive score. That is going to remain unchanged with employment data coming in soft here today. That looks very good for gold and continues to be a weak signal for the US dollar. Going to stay with the trades there. And again, I've been saying this a lot on the stream recently. My goal this year is to stay more systematic than ever. Edge Finder 101, watch for setups, look for pullbacks, look for entries, manage risk appropriately, look to follow trends and to trade them appropriately. I mean, that is what we're going to do all year long. And so far we've been doing excellent, right? So we've been seeing some gold signals that look great. I've gotten out of the way of stocks before the big sell-off. So again, staying systematic is the name of the game for me this year, and that is what I continue to plan on doing. So, we'll watch this. Silver, gold look good. Pound also on a pullback would look interesting, although you're probably not getting one. Pound US dollar and euro dollar probably looking pretty good here today. Yeah, look at there. You get some follow through. Nice push through those highs, by the way, for the euro. Pound moving higher here. Dollar yen continues lower. I mean, the dollar is struggling against most currencies. If you're looking at like dollar Swiss, you actually got to start turning some of these levels red, and now even threatening to break this key area for dollar Swiss. I mean, if we take a look at the dollar index here today, guys, take a look at this, down another 0.5% against other currencies. You've got key level of support here. This is huge, right? 103.5. Can this be finally the holding spot, or are we just really truly seeing a US dollar reset? I mean, one thing we know about Trump is he wants a weaker dollar. He wants better, favorable trade dynamics for the U.S. And oftentimes, an expensive currency makes your exports less affordable to other countries. The stuff that he's looking to do with the whole trade wars and tariff stuff, again, regardless of where you fall politically or feel about that, leave that at the door, and let's just keep an eye on the economic data. People are a little bit concerned about growth due to some of the changing dynamics. I heard a really interesting point. I mean, look, if you have Canada and Mexico, and they, as North America tries to stay competitive on a global scale, especially with like automobiles and things that, we build and create and export to the rest of the world, some of the input costs going in because of tariffs could hurt the competitiveness of some North American goods. Now, there's pros and cons to everything in economics, and nothing is binary. It's very easy to say, oh, tariffs good, or oh, tariffs bad, but there's just so many factors here. One thing I think we can all agree on is there's not a finite ruling on tariffs. Well, I hope we can agree on that, because again, if you think otherwise, you are not very attuned to kind of the world, right? I mean, at the end of the day, there are smart people who think certain things can work. There's smart people who think they cannot work. I would say the most likely consensus is that tariffs do cause a price hike, right? Inflation. But then the debate becomes, are tariffs a sustained inflationary thing or a one-time kind of price hike? That's, again, economics are highly debated, just like everything else in our world. But from a market's perspective, there's a lot of uncertainty here. And I think that continues to be the case, right? People don't know what's going to happen with the tariffs. People are a little bit concerned about the labor market. I mean, with good reasoning. You had a soft print here this morning. NFP came in soft, but notably revisions to the previous number also soft. And I gotta say, again, I'm doing my best here. Just leave your politics at the door for a second. The efforts of Doge are not yet truly seen in this NFP report. What I mean by that, there is largely expected layoffs in the U.S. government. The U.S. government is a huge employer in the United States. If those layoffs do, continue to roll forward and they're aggressive, those efforts are going to. This is February's number, right? We're going to see March number, April number. We're going to see those numbers rolling forward in the NFP report. If they continue to come in soft, the dollar could continue to come down. Yields could continue to come down. I mean, look at this. We got yields moving lower. TLT is probably looking pretty good here today, holding its gains at least on the day. I gave back a good chunk of my gains here on TLT. You guys know, if you've been watching, I've been holding for TLT for some time. Big move higher, pulled back big time in the last few days, but then a little bit of a bounce here today. Let's see if yields can continue to drop like I think they could. We'll see. Gold still in the positive, up about 0.35%. We'll take it. But we will see. I mean, again, it's an interesting time. Just we have also Powell speaking later today, which will be a crazy thing to hear from him. And then jobs data. I mean, it's just we are on a 24-hour news cycle, that is for sure. Also, just a heads up, I talked about the Edge Finder for a moment there. Let me remind you that we are coming to the close of our big super sale. We're doing 35% off the Edge Finder right now. If you don't have a copy of the Edge Finder and you are interested in getting one, Don't miss it. Now's your chance. We're going to drop a link here in the chat to speak directly to our support team to get information about the 35% off discount that we're currently running on our tools. If you're somebody interested in trading macro, if you're like, okay, I get it, this stuff moves the markets, and you're ready to come to the dark side, come join the fundamentals. I always make the reference that it's the dark side because all the big players, hedge funds, Wall Street, you listen to them talk, they all talk fundamentals. If they're the big bad Wall Street guys, if they're the dark side, let's join them. Let's not fight them. Let's use fundamentals to their full advantage. Instead of just staring at technical charts all day long, let's use the fundamentals. Let's use the macro. So if you don't have a copy of the Edge Finder, again, it is 35% off for a limited time. If you want information about that, here's 2 ways that you can get it. Number 1, you can send us a direct message. Chandler, if you don't mind dropping that one more time, the chat's busy today. You can take advantage of the 35% off discount by sending us a direct message, or you can head over to our website. In fact, if you're just interested in exploring the tool, if you'd like to see more of its features beyond just what I'm talking about on the stream, head over to a1trading.com on your browser, and then you can go under Edge Finder. You'll see there's a get access, then there's tutorials, and you can do all sorts of stuff here. If you go through the tutorials page, this is quite fun. You can actually go through how we score everything. We call this kind of like our free Edge Finder course, if you will. You can go through all of our different systems that we've built within the tool. We have a team here at A1 Trading, and we continuously improve what we have to offer to traders looking to better their economic data understanding, as well as sentiment data, track what institutional money flow is doing. What are they buying? What are they selling? By the way, that comes out later today. We get COT data dropping this afternoon to see what institutional money was buying and selling this week. I am very curious and invested to see what that actually is on a week like this. Were they buying the dip on stocks? Were they buying into gold? I mean, we'll see, but the data drops this afternoon. Again, you can access it within the Edge Finder's proprietary kind of COT dashboard display stuff. We can also pull that up. I know we're looking at old data at this point, but the new data will populate in the Edge Finder. You can select, take a look at the US dollar. You can look at the Dow Jones. You can look at the NASDAQ. You can look at all the different things, gold, and you can see if they're accumulating or selling certain instruments. But again, that data will be dropping here in just a few hours. So like I said, if you don't have a copy of the Edge Finder, there's your chance to pick it up. 35% off if you send us a direct message on the website. You can also chat with us at any time and ask any questions. Again, I know I'm going off on a tangent here with the sale event, but it is coming to a close. So I just wanted to make it very publicly aware. If you've missed it so far, now's your chance. Last call on the Edge Finder discount that we're doing this week. There you go. Okay, guys, up next, we've got a very special guest. He comes on every week. It's Kenzo, and he is coming on to talk a little financial. What do we call our segment? It's Fundamental Friday. So we're going to talk a little bit about this jobs report with Kenzo in just a second. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, and we are back with Kenzo. Hey, Kenzo, how you doing, man?
I'm doing great. Thanks, and you, man?
I'm doing well. It's good to have you back on the show, especially for a critical week like this. What are your thoughts on the NFP report? Again, a little bit of softness in the data. You had unemployment rate come in a little bit higher than expected, 4.1%. And then the NFP number, both revisions and latest data came in a little bit softer. What are your thoughts on this? And how are you feeling about the indices at this moment?
Yeah, I think at the moment things looks like we have some mix up because we are on the peak of all this geopolitics and stuff. But on NFP, I feel like it was going to be good if we never had this bad news on the tariff side. I think is the cooling off, which is good for inflation, which means inflation was going to go a little bit lower or cooler going further. But it seems like tariffs are going to be something that we're going to talk about for quite long. And I think everyone will be focusing on that. And that's why we won't see much of a bigger move, because at the moment, tariffs are going to be the topic of the day.
Yeah, I mean, Kenzo, we are, I would say, at a pretty big decision point for the S&P 500. You've got two things that I was talking about shortly before you joined the call here. We have the S&P 500 at a huge level of support. I want to call it 5,700 to 5,725. At the same time, the current S&P 500 movement is testing the 200-day moving average, which is a massive level of support historically speaking. But if it breaks, the last time we saw a sustained break, I mean, you had this kind of false move below the 200-day moving average. And by the way, oftentimes when you do get the continuation, a lot of times you see kind of a false push through the S&P 500's 200-day moving average, but it bounces back. But the last time we sustained a 200-day moving average sell-off, it got really ugly really fast. Like, for example, you had the big sell-off, and again, nice pop back above, but then when we failed and went again, it started this kind of multi-month downtrend in the S&P 500, and it got pretty ugly before it got better, right? So I don't know, what do you think as we sit at the 200-day moving average? Do you think bulls are going to start to step in here, or are you hesitant?
I think we're starting to break several support areas slowly. So if maybe we break the last one there, we might not really have any solid structure that we can actually get the support. So I think we've been on a very nice bullish structure for quite some time. And there is a possibility that maybe we might start to see some sell-offs coming slowly. Because remember, the tariffs means we're going to slowly going to have higher prices, and higher prices means lower sales. Lower sales means there's no business that much. So which means we must start to see the cut-offs. If maybe whatever that is happening persists, we must start to see some sell-off. But beside the tariffs, I think the market was already on the highest level. Maybe because of AI thing and stuff, but already we were on a very aggressive bullish moves. One way or another, we wanted to have a nice reversals before we go up. I think maybe that area might hold, because I see that like we have 4 days playing around the same level. Maybe that might be a sign that that zone is quite stronger. Maybe we might see a nice pushback.
Especially on the NASDAQ, Kenzo. Check this out. So the NASDAQ has been hovering around this 200-day moving average in this kind of key support zone. If you do take a
Yes.
look at the price action here, I mean, there has been some pretty impressive abilities for this market that is so panicked not to fall through those lows. I mean, it's held very well. So we'll see if that hold can continue. But yeah, I think you're at a
Yes.
pretty critical spot for NASDAQ, for S&P 500. Dow Jones also, I think, actually has a little bit of more room to come down and test these areas. But it is interesting, Kenzo. I mean, I'm in the same camp, of this overall, long-term bullish theme. And I'm actually glad to see this happening. I'm glad to see finally what I would say a little bit of a flush out in this bull market. I still think that we are in a bull market. I still think that we are likely to continue to go higher. However, you can't really it feels like you can't trust it when it just goes up and up and up and up and up, right? You want
Yes.
these moments of fear, these moments of panic to wash out some of the weak hands or some of the people who are, chasing that last kind of dose of momentum, right? You want to see a corrective move to really wash out people who are not true believers, right? You want the hype and the price action chasing traders to get out of the way, so that people who actually believe that there's a fundamental reason for the market to continue to go higher can get better prices and buy from the people who are scared, right? So I think, could this market continue to break support and go lower? Yes, it could, right? I don't necessarily think that it has massive downside from here, but could we get on the S&P 500 a 10 to 15% pullback? Sure, 10% would put us right here, 15% would put us down here. So this kind of zone as an area, I'll tell you, here's my take on it, Kenzo. I am as a U.S. citizen, I do a lot of stock buying and stock options trading. As we go lower, I am starting now officially to accumulate shares that I like. So while I'm not taking a big old, heavy long position on the NASDAQ, I am kind of picking up shares on stocks that I like. And I believe that I will be able to get a good buy the dip opportunity, even if we continue to go lower. So I am long-term bullish and would actually love for this market to continue to go down on a long-term basis. But on a short-term basis, sellers seem to have some momentum here. And if we get a break of that break and close below, I would say that in the short run, you may still see sellers in control, but we'll see.
Yes, I think you are right. That's why maybe I can say it's difficult sometimes to sell the stock market indices like S&P or NASDAQ, because every dip like that, it's actually an opportunity to buy at the lowest level. So sometimes, yes, it looks good when the market is going down like that, but the reversal can be aggressive because everyone is just trying to get or to catch these shares or these stocks at the lowest level or discounted price.
Yeah.
So I think, yes, I might say the market is overbought. We still need to see maybe some smaller sell-offs before we continue. And yeah, I think I'm not really confident holding sell positions, unfortunately. So I'm just waiting to see what will happen. But I like the fact that the market is still holding up. The sell is there, but we can easily see that we don't really see another aggressive sell-off. So that shows us that those companies inside these indices are still very strong, and it's still early. Around March, it's where companies, they actually offer like extra cash to do some research or R&Ds. So which means there is still more development on those companies. So mostly they will actually perform very good going further. So selling off because of smaller downtrend there or smaller sell off, it's good in a short term, but in a long run, I think we are going to see some good results.
Just because you mentioned some of those big companies, especially the ones that have a lot of cash on hand, companies like Apple. Apple has actually held up decently well compared to some of the other names. Here's Meta. It had a 20-day winning streak and has now entered into a 15% pullback. I mean, these are kinds of names, Kenzo, that, as they dip, I personally would love to buy some shares. I'd love to get into some of these companies now that they are seeing some proper sell-off. So there's Meta. Nvidia has actually been a big loser, for a long time now. Actually, if you go back, we are trading at the same levels as we were May of last year. So it's almost been a full year where Nvidia stock has gone pretty much sideways. So the way I see this is, if these things continue to go down, look at Amazon. I mean, Amazon, just my opinion, not financial advice, looks great, sitting at the 200-day moving average, long-term, very strong company, has a ton of money on hand, also involved in the AI trade heavily, and of course, a massive kind of consumer discretionary name. People buy all their stuff on Amazon. So I think there's opportunities out here where people are getting fearful. Doesn't mean that we can't go lower for, stock indices. Clearly there's a sell bias here in recent days. I mean, almost every single attempt to move higher is met by, selling, but I think there will be some opportunities that come out of all of this. What about gold, Kenzo? I am long gold. Do you have any trades on gold, or do you still like it?
Yeah, on my side, I did actually have last week have positions, but I'm already out.
Mhm.
So at the moment, I think the market is just playing around the same level. You can see that even NFP did not really have any effect. I think at the moment we are actually focusing on Russia and Ukraine. If things get well, or maybe in the coming weeks, I think it's where we're gonna see maybe a sell-off. But I think we already have another thing on the in the room again, another bigger elephant in the room, which is tariffs. And if they keep playing around, that creates panic. And when there is panic, most likely we'll see gold going higher. I think that it will actually try to continue to go even higher, because we can see that it's no longer getting weaker like what we saw before, where it was selling, then trying to recover again.
Yep.
It seems like it's going to go higher again. And it's reasonable. It's reasonable to say, I think it will continue with that bullish move until we have everything is clear. But I don't think everything's going to be clear anytime soon.
And to add to your point about overall gold could continue to trend higher as you have those fears, but you also just have weakness in the dollar. I mean, clearly we just had the NFP report came in a little bit soft, and that's following a number of economic data points that have been soft for the U.S. Kenzo, I know you're a fan of the economic heat map. We talk about it each week when you come on. Here's an updated look, right? So if we take a look at where we are, there's a lot of red in here. I mean, I remember when we first brought this on and you and I were discussing it for the first time together, this thing was all blue, right? By the way, we changed the look a little bit. I'll show you. Just so what we have is the economic data on the left, obviously, and then we actually created a surprise column. And all this does is it says actual values relative to forecasted values. How are the data points falling? And so what we see here is that, for example, manufacturing PMIs a little bit soft, services was good, retail sales soft, but inflation is problematic. JOLTS job openings, ADP this week was soft. We'll have the NFP numbers we'll update shortly here once that comes out. But again, overall, still a lot of red in this chart, and the U.S. jobs data did not really serve to help the picture here today. I think that leaves you with dollar weak. And, we also see yields heading lower here today. I have a position in TLT, which is bonds, and bonds doing okay on this. I'm actually surprised, to be honest, Kenzo, that gold is not pushing higher off of this. We'll see. Maybe there's some other geopolitical headline that I'm missing.
Yeah, I think there is a lot to actually digest at the same time. So everyone who it's like investing at the moment, they actually taking like 2 steps before taking any bigger position. I think it's not really surprising that much, but I like the chart that you showed a few seconds ago, because if you check DXY and you check this graph here or the list, it's clear that USD is not performing very well at the moment.
Right.
We have a lot of rates, and by just looking, once you go on dollar index, or actually let's say the dollar, you can easily see that already you're expecting some poor performance, and it's actually happening there, which is actually perfect. So I think I think with the graph or with the chart that you showed there, it just makes everything quite straightforward.
I think, a couple weeks ago, we noticed together that the U.S. economic heat map was really starting to turn red. And sure enough, the dollar has continued to plummet, since that time. So it's been interesting to see, again, fundamentals, Kenzo, I would argue, lead everything else. I mean, I know a lot of people love to say, price action is king and price leads. And I would make the case in point that fundamentals lead. Like, for example, months ago, you and I were talking about, before Trump took office, that Trump last time around wanted a weaker dollar, and it happened over time. And then this time around, he wanted a weaker dollar. It's happening now, right? So we were talking about these themes weeks and weeks ago. Now, of course, nothing is 100%, and things are never exactly the same in markets, and they're hard to predict. But generally speaking, the point is fundamentals can guide the story before the price action starts to reflect it.
No, not sometimes. I think actually 100% of the time,
Hmm.
the market moves based on the situations that are actually happening direct to the economy. Because without, if we can take the economy, which actually controls everything like currencies, obviously there's no technical. So fundamental, it's actually what's really happening, why is it going down, why is it going up. Then after, it's where you can start to draw the lines and say, okay, I think maybe this area is where the market will support, but the backbone, it's actually the situations that are actually happening. So
Yep.
it's like, maybe if maybe there is, let's say, any pair might be stronger. If maybe there is a disaster or something, it doesn't really matter what the stronger support line says, the market will just act in a different way. So, which means most likely, actually, 100% of the time, the market acts based on the true story, what's really happening behind the scene.
Yep.
And at the end of the day, it's where we start to understand, okay, we can buy here because of this and that, but mostly it's because of the fundamentals, or let's say economic events.
Kenzo, I remember years and years ago, before I really started to dive into fundamental analysis, hearing something like what you just said or what I just said actually really frustrated me because I wanted it so badly to be the charts just move off of technicals and news just follows what the technicals are doing. And what
Yes.
I found and what I eventually accepted is that every time you have massive moves and massive trends that happen in markets, there is a really strong fundamental catalyst that started
Mm.
and fueled that trend, right? So big moves in the dollar, big moves in gold. There's always a real world reason that floods money in and out of I mean, that's how the money is flowing, right? So if the European
Exactly.
economy is doing really strong all of a sudden, it's not price action that's making that happen. It's real world events that are taking place, funneling money into a place, and then the stock prices and the euro, they start to reflect the real world. Fundamentals lead,
Exactly.
price action follows. And some people really hate when I say that. But again, that is genuinely how I feel. And I think it's important that, if I'm going to be, you obviously feel the same way, Kenzo, but it's really, it can be frustrating because fundamentals are very complex. They're very difficult. So people don't want to hear that, oh my gosh, markets are difficult. That's not fun. They want to hear support and resistance is all you need. It's really easy, right?
Yeah, I think sometimes it's been, to be honest, the way we start to learn the market, we get fed this type of information that everything is technical. But if
Mm,
maybe you want to make it simple, let's say maybe we say Apple as a company, what
mm,
makes it to move? There must be reasons why it's supposed to go up. They have few products which are selling very well. They have upcoming products. If they stop, obviously there's nothing's going to happen. Even the
mm,
government is like that. So the economy is like that. If
mm.
there is ins and outs that are going on in the economy, that means the economy is surviving. Whether it's positive or negative, that helps the market to move up and down. So it's actually transactions happening, but mostly they are fueled by economic events. Are we thinking that maybe it's going to be positive in 3 months? Are the things going to go bad? And that makes the market to react. Then after, just for us to understand what's really happening, it's where we're going to come with the lines and throw 1, 2, 3. But at the end of the day, it's actually the actual events that are actually happening in real life.
Yep, exactly. And again, somebody in the chat says it is indeed a tough truth to accept, Nick. Look, I'm not saying, and I'm not here, and I don't think Kenzo is either, saying that technicals are useless or that technicals are silly or a waste of time. That's not what we're saying. We're just saying that it's a little bit silly to completely think that the markets don't trade based off of fundamentals when they absolutely do. I mean, your point about Apple is perfect, right? Here's a real world company. There are employees that work at Apple. They get stock options as part of their employment. And then, executives get a paycheck out of the company earnings. And, those are real world forces. People on the streets are all using iPhones, or maybe they start switching to Samsung phones. Like, those are real world forces that impact the stock price. The stock price impacts the overall stock market index. The overall stock market index impacts the U.S. economy. The U.S. impacts the whole world. So it all is this like big financial system, and it's pretty incredibly complex. And it's not always a fun truth to accept that. Look, fundamentals matter quite a bit, and that there's so much more to learn. I was actually on the way into my office today just thinking to myself, Kenzo, is like, I've learned a lot about fundamentals. I know you have as well over the years, but it would be silly of me to say that I think I know everything about them. I'm constantly learning more about the financial markets, and it's why I love what we do. There's always something new to explore and to learn.
Yeah, I don't think you can actually get it right 100%
No.
at once. So we always learning, the ecosystem always changes. So we also have to adapt to the new reality because things change. So now we have to understand AI, and that also fuels the market. So it means now it's different from 3 years ago. So obviously you can't learn everything at once, and you will never stop. You can't get it. There's no way that you can say, okay, I got it. Now I'm going to stop. Then you just get it right every time. So every day it's a different day. It's a different learning, and we just keep doing like that. And it's fun once you start to understand some of the basics. And especially for us, or for me, who's not coming from like a background of economics or something like that, it's easier
Same.
for me just to keep learning tariffs. What are these things? Tariffs, or it's custom tax. Then it makes it easy for me to keep learning, and you just trying to push more and more. And it way much better if you also make money on the market. Simple as that.
Well, and I mean, Kenzo, I too don't come from a finance background. I went to school for software engineering, and
Yes.
just absolutely fell in love with learning about the markets. And it is an incredible thing. The markets. Here's one thing I will say to everybody listening: if you're somebody who thinks you can call out what the market's going to do all the time, you can't. The markets are very, very difficult to predict. Can you make educated guesses and good risk management and technical analysis and fundamental? You can do all of that stuff and sometimes still get it wrong. But again,
Exactly.
what learning every day from the markets, like Kenzo is discussing here, like what we're talking about, I think starts to humble you. And that humility, um, look, I'm talking, I could be arrogant in other ways, but what I'm talking about in the markets is that not knowing everything and constantly learning puts you in a state of, okay, the market is way bigger than I thought it was. It's way smarter than I thought it was. And for me to survive in this, I need to humble myself. And what that equates to is I need to size down my position sizing. I need to wait for proper setups and really do my homework and research before I go throwing trades around. Once you accept, again, everybody who's listening, if you can accept that you're not going to just kill NFP and it's going to be easy. Like once you can start to accept this market thing is really, really smart and it's a difficult place to take money out of. Once you can accept that and respect the market for what it is, it starts to get better. You start learning things and you say, look, I am a student of the market. I'm not the market's master.
Exactly. So it's actually, you are 100% right, because at the end of the day, it's like you start to have this new mindset, or maybe we can say psychology or trading psychology. So whatever that, mostly when we start with the market, we start by acting like we know it all, until it humbles you to a point where you start to see, oh, I have to have this type of a mindset to actually to be consistent. Everyone can make money in the market, but not everyone can be consistent. So that consistency needs your trading mindset, or let's say mindset in general, and slowly create that habit to be humble, to understand that, oh, I might be wrong. Every day I might be wrong. So I have to be not like, I'm not, you don't try to act like you know everything. So that actually helps also.
Exactly. Well, Kenzo, one of our best conversations, I would say. Really, really important stuff. The lesson of humility. I know that sounds like kind of general trading psychology stuff, but generally, or genuinely, what we're talking about here is very important stuff. Understanding that the market is very smart, and respecting the market will take you very far. It will change your mindset, and it will encourage you to start doing the things that will make you ultimately a continued student of the market, but potentially a profitable trader as well. Kenzo, thank you very much for coming on here today and sharing some thoughts with us. Before you go, let me just mention to everybody who's watching, do me a big favor. Go subscribe to my friend Kenzo on YouTube. His link has been dropped here in the chat for you. It's at Extra Hot Forex. You can find him there if you want more fundamental and technical coverage of the markets. He's sharing plenty of ideas for free over there on his YouTube channel. And I highly recommend that you go add him to your subscription list on YouTube for more free value. Kenzo, thank you very much for coming on today.
Thank you very much, man. And also your viewers.
All right, man. See you next time. All right, and we are going to continue onwards here. Again, market really still, I mean, so my thought, I said this, you can roll back the tape 45 minutes ago when we discussed this. I'm still going to stick to my guns here on what I think the reaction, quote unquote, should have been to NFP. We had, just to recap, soft labor data. Softness on the jobs added number and revisions lower on the previous. Unemployment rate ticked higher. The way I see this at the time that it dropped, as well as right now, is that this continues to support a dollar bearish narrative and bullish for gold and bearish for stocks. So far, the initial reaction was like nothing, like there was no movement. Now we are starting to see some follow through to the downside, which I think makes sense for stocks, right? Stocks a little bit lower. Gold mixed, a little bit of down, a little bit of up, not too far in either direction. And the dollar does seem to be following through a little bit to the downside. That being said, at any moment in this crazy market, new headlines could hit the scene and change everything once more. Tariffs, all that stuff, man, it just seems to never end. Of course, we'll be here on the A1 Trading live stream to give you coverage as much as possible. Just a quick reminder, the Edge Finder, which we just discussed, the economic heat maps, the COT data, all of our stuff here is currently 35% off right now. If you are interested in getting a copy of our tools and you want to trade with the data too, start using our stuff. We put in countless hours on building these tools and constantly monitoring and improving and maintaining the stuff that we use every single day to find opportunities in the market. Again, respecting the market also means studying it, and having the right tools to do so is critical. If you don't have a copy, now's your chance. Get 35% off all of our tools. It's a one-time lifetime access purchase. If that's something that you're interested in, you can send us a direct message using the link that's being dropped in the chat right now, or head over to a1trading.com to explore the full list of features. So if you head over to our website, under Edge Finder, you can click tutorials or get access, and you can read all about the different features and how we score everything, all of the different metrics that we use in the Edge Finder. Don't miss your opportunity. Again, like I said, 35% off is ending soon. Feel free to message us if you have any questions. Up next, we got Forex James taking over the show. And of course, a highly sought after regular show host here on the A1 Trading Show. And he's up next just after this quick break. Stay tuned.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share Edge Finder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
Hello. Sean acting as teaching assistant. I appreciate it. How's everyone doing? Hope you're all having a great week, and hopefully none of you have lost too much money. The red carpet shows knows the drill. So just before we get too far into the charts, yesterday I said I'd pull some data for you regarding institutions. So I've got the data for you right here. Just give me a second here. So what we've got is I spoke about this in my seminar at Madrid to put into perspective retail trading and retail results. So lots of people typically put institutions on a pedestal. You know, institutions are obviously the ones moving markets. I don't think that's a secret, but their performance is actually pretty lackluster in the grand scheme of things. You do get very, very good ones. I'm not saying you don't, but again, if you take the average results of them, they're nothing impressive really. So for most of us in the stream, we would really want to be paying attention to the macro, some macro strategy. I assume none of you are doing things like quant macro or multi-strategy. Some of you might do multi-strategy, but equity long and short maybe. But again, we'll focus on macro. So the macro average, I think off the top of my head, from what I remember, it was roughly around 27% year-on-year gain. Yearly gain for 2024. So 20 to 30%. Again, it's good. It's definitely not anything poor. But if you're looking at retail results, that's not something that we can't achieve. It's not anything crazy. But then if you look at these people that are lower down, or these institutions lower down doing 10%, 11%, honestly, it's I'm going to say it's embarrassing. And the reason I'm saying it's embarrassing is not because the results necessarily bad, but they have so many more resources than what we have. And you could, in theory, just put money into the S&P and either outperform or do just as well. So that's, again, it wasn't anything too interesting, but I thought I'd find that picture for you. That was straight from Bloomberg, by the way, so it's legitimate information. Okay, right. Let me see what's going on in the chat. Bashi, you're going to rug pull me. How are you going to do that? James, please go to Good Daily and draw a cat on the chart. I'm flattered you think I could draw a cat. James, we talked about this. Enigma, trend line, support resistance, order blocks, fair value gaps, move the markets. You know what, Sean? Yeah, I don't have the energy to argue that. Depends on zodiac sign. Wow, it sounds like you guys have really leveled up your trading. You've got zodiac signs, you've got fair value gaps and trend lines. I'm really impressed. Great stuff. So anyway, let's get into the markets. I've got quite a few things on the watch list, actually. So I've now flipped to bullish on euro dollar, pound dollar. The problem is, obviously, we've had a huge run. Well, relatively huge run on these pairs. So I'd need to see some sort of pullback. Now, whether it be a mean reversion or a catalyst comes like a news event, I don't know. But I don't care, to be quite honest. I just need to see price come lower. And then I can start looking to buy off this previous resistance that would also, theoretically line up with this 200 moving average, which would be quite a nice confluence. Exactly the same situation on pound dollar. It's almost the same setup, so I won't run through pound dollar. Gold, I would also really like to get long on gold. The edge finder is still reading gold as bullish, and the trend is still up. So yeah, it seems like a really good opportunity. Again, just looking for some pullback here at some point to somewhere. We just actually bounced off the 200 moving average, so that's quite nice as well. But we're currently just sitting in a consolidation. We formed a resistance, bouncing off the previous support. Sorry, ball out, but that's the way I see it. Australian dollar yen also really, really nice short. I'm still very bullish on the yen long term. So again, it's just a case of waiting for some sort of pullback here. Wherever it comes, I'll look to sell. Not too interested in doing any fancy technicals on yen pairs. I can essentially just place a sell and let it run. Now, going short on the dollar is becoming more appealing in my view, especially now unemployment's ticked up. So quite happy to look to go short on the US dollar Swiss. I think that would be a good little call. Short term, again, I'm not sure I'd want to hold that one for too long. Next one is the Australian dollar US dollar. I really like this one. I'm actually tempted to take it now, really. I'm not going to. I just want to see this H4 candle close, but I really, really like it so far. So had a really nice push to the upside, rejection, push to the upside, pullback. Didn't quite reach this 50% retracement level, which a little bit unfortunate, but it's fine. We slightly bounced off these moving averages. You can take of that what you will. But yeah, I think again with the dollar bearishness, I think it makes a lot of sense to start looking to potentially trade back a lot of the room that we lost, or a lot of the gains that we lost at the end of last year, start of this year. So if we get some sort of positioning and see dollar weakness continue, I think Australian dollar, US dollar actually has a lot of potential, because it's not super overbought, or it's not super extended like euro dollar and pound dollar. Sorry guys, I'll check the chat in a second. Let me just run through this so I don't get sidetracked halfway through like I normally do. The Australian dollar, New Zealand, I actually don't have any research for this, but I noticed, I think it's Danske Research, the institution is short. So I'm just looking for a potential entry. I also need to do some research this weekend onto this market and just see what's going on. Now, the DAX is looking beautiful. I'd love to go long on the DAX. It's been on the edge finder for a little while. It seems like we're in a European period now with the pound, the euro, the DAX. I think the FTSE's fallen off, but still looks really, really good. If we could start looking for long positions somewhere at the previous lows would be, looks great. Don't see any problems there. The Dow, I was also looking to go short on the Dow again at some point where, I don't know, it'd be a short-term trade. I don't like to hold swing shorts on the equities or the indices markets, but I think just a short-term trade back down to the previous low at 41.66, it makes complete sense to me. Pound Swiss, I took a long position on this one actually on my stream slightly earlier. Currently looking a little bit rough, but this trade in theory is pretty strong. So we've got sticky inflation in the UK, which is slowing down the rate cut narrative by the Bank of England, and it's looking a little bit more hawkish. The UK growth has been, pretty good actually. I mean, if you look at a lot of the pound crosses, that's why we've seen pound performing so well. Now the Swiss is still dovish. I'm still expecting them to go down to neutral rates eventually. I mean, that's a long-term idea, but the theory is still there for this trade. So I'm just seeing how it goes for now. Euro pound, I'm still short euro pound. Now, this isn't my position, actually. This is a position from the London Stock Exchange. This is their exact positioning. My entry is slightly lower. I'm doing dollar cost averaging, but I thought I'd mark their position up so I could show it on stream. But yeah, I think the idea with euro pound is still great. Even though the euro isn't necessarily as bearish as I once sat on it, I still think we're due for some sort of reversion or pullback on these euro pairs. And we've still got the Swiss yen, as always. I've been sat in this one for quite a while now. In fact, I think it might be coming up on a month that I've been holding Swiss yen, and it's essentially just been sideways. So that's loads of fun. But yeah, that's pretty much it in terms of what I'm looking at or what I'm in. Euro US dollar not getting much pullback. It's going to continue up. Look at daily time frame. Maybe. I mean, I'm not bearish on euro dollar anymore, but again, realistically, it's had a large upside move. I would expect some sort of downside just to follow as natural sort of market behaviors. AU's a good buy. Ball out. You're gonna convince me to go long. I might do. Again, I'll see how the H4 candle closes. But I think I do. I'd say it's probably my favorite idea at the moment so far. I think it's got quite a lot of potential. I've just noticed it's not on the edge finder though, but I'm happy to play my own edge on this one. I got at least 100 pips up. You know what, ball out? I will hold you to that. We will look at that in the coming weeks. Jimmy, do we US dollar yen short idea? Yes. I've not checked. Actually, yeah. I would like to go short. I mean, I've been saying this for a while. The problem is, take it, damn it. Yeah, okay, ball. I might do. We'll just give it some time. With dollar yen, again, I really, really like it to the downside, especially off the back of the dollar weakness that we're getting. Still very bullish on yen long term, but I just want to have some sort of pullback, really. I missed, in hindsight, I should have really have entered here, but this is a slightly different chart setup I'm using, so I didn't really see it at the time. But yeah, I'd like to see some sort of pullback, just maybe a correction up to this 200 moving average or whatever it might be, some sort of buying interest, then I can sell into that. But yeah, I think the short idea in general is pretty much unbroken, really. Yeah, it'd just be interesting to see where we could come down to. I think my midterm target would be sort of the intervention low. So when we had the intervention in July, which was all the way up here, and the market melted, and then it came back and it melted again a little bit. So back from, when was this, September 2024, around 140 would be where I'd be happy to hold into. It'd make good content for the stream. It would make good content for the stream, but I'm not sure it'd make good content for my account. James, look at COT data for euro. Okay, fine. Yeah, they're increasing longs. I mean, they've added shorts as well, but their long percentage has gone up. Net positioning reduced. So it's gone from -51 to -25. Short contracts taken away, 13.6. Long contracts added, 12. Yeah, looks like the longs might be getting built up now. So we will. Yeah, we'll have to see. But again, this is pretty much outdated now. This was from the 28th, where now it's almost 10 days later. So it'll be really the next COT release that will be sort of a big decider in my view. Help with silver. What do you want help with on silver? I'm still bullish. I'm bullish on silver and gold at this time. And to be quite honest with you, I did close out of silver up here, luckily. So I did manage to make a little bit of a profit on silver. It wasn't anything that I was really expecting or wanting, but it is what it is. But anyway, I think, yeah, the silver idea is still there for me. But I just need, if I was going to enter again, I think this 50% pullback level would be perfect. Coincide quite nicely with this 200 moving average. The RSI would likely become oversold at that point. So actually, I'm going to add that to the watch list. But yeah, I think this might be quite a valid idea. The thing is, I'm not going to be taking any trade. I took pound Swiss, but that's it. I'm not looking to take anything extra really, just because we've had US news, and we've also got Powell talking tonight. So I'm just gonna call it an early weekend. Emmett, could you take a look at AUD CAD? Yeah, I can have a look. Here, okay. I quite like the long idea, and yeah, I mean, again, just based on the technicals, I think a long would work here, but I think, yeah, maybe you'd be looking at sort of a 1-to-1, 1-to-1.5. It's a very ranging market at the moment, so I think you could, in theory, just play sort of the ping pong with the market, just essentially sell the resistance, buy the support until there's a clear break either way, really. I mean, that's a little bit rough, and it's not the way I trade, but yeah, either look for the break, retest continuation, or the opposite, wait for the break of support. I would lean more towards a bullish idea, but it's not really something I'm paying much attention to at the moment. TA help, please. When drawing trend line to anchor it onto an order block or FVG? Sean, I'm not even going to answer. I think someone, whether it be James or Chandler, should mute Sean for the rest of the day. US 30, is it bullish? No, US 30 is actually the opposite. It's pretty bearish right now. So we have a look at the edge finder here. The the Dow, actually, I've just realized I've not updated this since NFP, so let me just make sure the data's up to date. Yeah, okay. So the Dow is still really bearish with -6. The market seems pretty bearish as well. It's had quite an aggressive move down. So let's just have another quick look here. Yeah, so what I'm looking for in the Dow, I won't be trading it today, as I've already said, but next week, if we can see a break of this support, and well, you know, whether it be a break and retest or even just a clean break during New York, I'd be quite happy to take sort of I guess it would be a session trade, sort of like a breakout New York session trade, essentially. Although it's, you know, it's the H4 time frame, so maybe it won't quite work like that. Pound yen, yeah. I'd be a little bit hesitant to go short just yet because the pound is very resilient. It's actually quite strong at the moment. So I'd be more waiting to sit on, I'd be more happy to sit on the sidelines on pound yen and then look to go short after that. So I'm pretty much a perma bear on the pound long term, but I've still got to be able to understand when to buy it, when not to buy it, when to sell it. And at the moment, I can't really justify selling the pound. So I'd be happy to just wait. Essentially, I wouldn't buy it, wouldn't sell it. I'd wait until there's some sort of data that would back up pound shorts. Then I'd start looking to go short, benefiting from a weaker pound, weaker yen. But yeah, just at this moment, pound shorts, not the best idea, I would say. How many people do you think are using the Edge Finder in total? I really don't know. I'd say maybe, you know, high hundreds, thousands, but I've really got no idea. I don't pocket watch people like that, Loris. I don't trade sessions, Jack. I was just saying about Dow, if, you know, the only opportunity I see on Dow is I can't trade it today. So the next opportunity really will be New York session on Monday. So I would pay attention to it then, but yeah, that's it. I love when James say essentially. Why? Are you cautiously looking at reversal patterns on euro to short, or are you looking to go long and pullbacks? Both, Alan, actually. So euro dollar specifically, I'm not looking to go short because I just don't have any reason to short this market anymore. So I'm just looking really to go long on the next pullback. I'd love to see a pullback down to here, which would be just slightly above the 105. Whether we get that or not, I really don't know, but I will be looking to buy the next pullback. But then we've got the other charts like the euro pound, where I'm happy to just keep shorting, because while the euro, in my opinion, is no longer the super bearish currency it was, the pound is also doing quite well. So I'm quite happy to go in for a mean reversion. The euro and pound are quite correlated. This market is very prone to reversions, so I'm playing the edge on that one. But yeah, that's pretty much it, really. James, you swing trade or only add in a few days here and there? I do both. So normally what I do, ball out, is I will find some sort of trade idea that I really like. So it'd be the most recent one, I guess, will be yen, but it's taking too long, so it's probably not the best example. So like euro dollar shorts, when I was really playing that one, I would have happily taken swing trades and day trades and capitalized on that idea as much as possible. So I'm happy to do day trades, swing trades, position trades, whatever's needed. Got a good profit rolling Australian dollar yen short. What's your thoughts on holding unrealized profitable trades over the weekend? I don't see a problem as long as you have a broker that's not going to mess with you. It's not going to, you know, have a massive market gap open. Obviously, that's natural if you have some crazy news, but I don't see a problem holding trades. I hold trades into the weekend quite often. In fact, I will be holding trades into this weekend as well. EA is baffling. EA is very baffling, actually. It's had a huge run. Huge move. I'm still looking for somewhere to go short on this, actually. And again, this one, it wouldn't be a macroeconomic play. This would be purely just trading a reversion. It's, it's risky to say markets are overbought or oversold, or they're too high, too low. But in this case, I really do think it's overbought. Now, it can go much higher. It could, in theory, go another sort of 15% up to the previous high here, back from 2020. How likely is that? I don't think it's very likely. And we've just pushed up above the previous sort of highest high, or recent highest high. So, RSI is very overbought. We're very deviated from moving averages. So yeah, I'm just not very confident that this one's going to go up that much higher. But that's always famous words, isn't it? It can't go higher. It can't go higher. It can't go lower. Blah blah blah. And then it does exactly that. Ball out says I'm missing out on Australian dollar, US dollar. Yeah, I do really like it. I will see. We've got 20 minutes until the H1 candle close. If we can get a nice candle closure, I might do it. Why is GBP USD COT graded with 2 when GBP report is neutral while USD is bullish? How is that bullish for pound? I don't know. I'm not sure. Let me have a look. I'm not really sure how the scoring system is done exactly on the Edge Finder. But yeah, let me have a quick look. So weekly change. Actually, I'll put it on the screen. So weekly change for the pound is weekly change is favorable for the pound. Obviously, reduction on US dollar, increase on pound. Although percent longs. Yeah, I don't know. I'm not 100% sure. You'd have to ask Nick on the sort of scoring system he uses exactly. But I'm going to be honest, I could see COT flipping next week in complete favor of the pound. Why am I scared? Ball out. I'm not scared, but it's not just me I think about, because I send my trades to like 90 people in the Discord. So there's also 90 people following what I'm doing. So I just need to, when I take a trade, I have to be very, very careful. I have to think it through. I have to have a good reason for the trade. So I'd rather be overly cautious than unneededly reckless. Siobhan, I wish I was pound dollar long. I'm not, unfortunately. Eddie, you want to go into NU? Actually, I quite like New Zealand dollar as well. New Zealand US dollar as well for longs. I think.
All right, everybody. So it seems that James's Wi-Fi went out. So we're going to cut the show here. It's unfortunate it had to end so suddenly, but things happen and Wi-Fi goes out. Lord knows we know about that. So I'm going to drop James's information in the chat one more time before we go. Make sure, guys, to go check out all of James's services. He's got Elite Traders. He's got his own website. Follow him on Twitter. And I'll drop his YouTube one more time. I'm doing most of the work for you. All you got to do is click the links, maybe bookmark some stuff. I don't know. Hit subscribe. Guys, we will see you next week. We'll see you Monday. So safe trading. Have a good one, everybody.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.